All right, let's dive right in. Today, we're going to tear into the latest quarterly results for Bank of Baroda, one of India's biggest public sector banks. We're going to find out what's really going on with their financial health. So, every quarter, public companies like Bank of Baroda have to release this huge, detailed financial report. It's basically a massive report card. It tells us how they did, where their money came from, and, importantly, what kind of risks they might be facing. And that's the big question, right? These things are just packed with numbers, financial jargon, and tables that can feel, a little overwhelming. But hey, don't worry. That's what we're here for. We're going to be your guide and break it all down piece by piece. So here's the game plan. First, we'll get a handle on the document itself. Then, we'll hit that big headline number, the profit. After that, we'll dig into how they actually made that money, give the bank a full financial health check, and wrap up with what the independent auditors had to say. Okay, first things first. This report we're looking at was filed on October 31st, 2025. It covers the bank's performance for what they call the second quarter, or Q2, of the financial year. That's just the 3-month period that wrapped up on September 30th, 2025. All right, let's get to the juicy part, the number that always grabs the headlines, net profit. This is that classic bottom line everyone's always talking about. Simply put, after you subtract all the costs and taxes from all the money they made, did they actually end up in the black? And the answer is yes, a big yes. The net profit came in at just about 481,000 lakhs. Now, if you're not used to those numbers, that's just a fancy way of saying 4,810 crore rupees. A huge number, for sure. But a number by itself doesn't really tell you the whole story. You need context, so let's put this into perspective. You can see here, profit's actually up from the last quarter, which is great, shows some good momentum, but it is a little bit down compared to this exact same time last year. So what does that tell us? Performance is pretty solid, but maybe not hitting the same highs as last year. Okay, so they made money, great. But how? Where did all this income actually come from? Let's peek inside the bank's wallet. The number one way a bank makes money is through this thing called net interest income. It sounds complicated, but it's really not. It's just the difference between the interest they earn on loans, home loans, car loans, business loans, and the interest they have to pay out to you and me on our savings accounts. I mean, that's the absolute bread and butter of banking. So where's that interest coming from exactly? Well, this chart here breaks it all down. Look at that. Almost 75% of their interest income comes from advances, which is just bank speak for loans. It's crystal clear that their main business, lending money, is their biggest moneymaker. The bank kind of splits its work into a few big areas. And the report tells us that for this quarter, retail banking, that's the part that deals with everyday customers like us, was the single biggest contributor to the bank's revenue, the biggest engine. Okay, profit's a great headline, but it doesn't tell you everything. To really get a feel for the bank's health, we need to pop the hood and do a proper financial checkup. We got to look at the risks they're dealing with. Right. Let's talk about something called non-performing assets, or NPAs. The easiest way to think about these, they're basically soured loans. Money the bank lent out that just isn't being paid back on time. And obviously, if you have too many of these, it's a huge red flag. The report gives us two numbers here. First, there's the gross NPA percentage, 2.16%. That's the total pile of soured loans. But then you see the net NPA, which is way lower at just 0.57%. So why the difference? Well, that's because the bank has already set aside money. They call them provisions to cover these potential losses. The smaller that gap is, the more prepared the bank is for things to go wrong. And what's even better is the trend. Just look at this chart. Over the last year, that gross NPA ratio has been dropping and dropping and dropping. That is a fantastic sign. It shows the bank is really getting a handle on its loan quality. Next up, the capital adequacy ratio, or CAR. Now just think of this as the bank's financial shock absorber. It answers a really important question. If a big, unexpected crisis hits, how well can the bank handle it without going under? And their number is 16.54%. Now that is well above what the regulators require, and it basically means the bank has a really strong financial cushion. A very, very good shock absorber, ready for a bumpy road. Last but not least, let's talk about the auditor's report. See, after the bank puts all its numbers together, a team of independent auditors comes in to check their work. They're kind of like the impartial referees, making sure the game was played fairly.
So these are the folks who went through Bank of Baroda's books. Their whole job is to give what they call moderate assurance that the numbers are free from any material misstatement, which is just a fancy way of saying there are no big glaring errors.
Okay, this right here is the single most important line in their entire report. When an auditor says their conclusion is not modified, that's basically a big green light. It's a clean bill of health. But in this case, there was a little asterisk, one thing they really wanted to make sure everyone saw. The auditors pointed out what's called an emphasis of matter. So what's that about? Well, it turns out the bank has a huge pension payment it needs to make, and the rules from the RBI allow them to spread that cost out over 5 years instead of taking the hit all at once. The auditors are saying, hey, just so you know, if they had taken the full hit this quarter, the net profit would have been lower by about 10,884 lakhs. Now, this doesn't mean the bank broke any rules. They didn't. But it's a really crucial detail for understanding the real performance this quarter. All right, so let's tie this all together. What did we find in our investigation? 1. Profits are strong, even if they're a tiny bit down from last year. 2. Lending money is still their main gig. 3. They're doing a much better job managing those soured loans. 4. Their financial shock absorber is solid. And 5. The auditors gave them a thumbs up, but with one very important footnote. And that really leaves us with a final, pretty interesting thought, right? It shows that a company can follow all the rules, but the choices it makes can still paint a very different picture of its performance. So the next time you see a company's results, what are you going to look for, beyond just that big, flashy profit number? Something to think about.